What is up, fellas? What is up? Let me just make sure this is all good to go. I'm back. What's going on, fellas? Obviously, a lot of things has happened. Good to see the sentiment has changed since the last video. Things were in a much worse place. But I did want to hop up today and still talk about the potentials of a bull trap. I know, obviously, we've had a massive trend reversal. Probably a lot of you guys don't want to hear this. I'm going to try to wrap it up in about 20 minutes because I'm heading to the gym. So I would like to certainly crank this out for sure. Let's dive right in. And also, the reason why I think this is super important to nail this analysis is because last month I was fortunate to make more money in my life than I've ever seen in 1 month. Well, not that I've ever seen, but in 1 month I did really, really good. And that's why I think it's super important for us to nail this analysis. And of course, there's multiple strategies to get rich, as we're seeing play out right now, which is awesome. Love to see the boys get the bag. But however, please take this information in and consider some things. And that's all. All I ask is just take this information with your strategy. I know it sounds like I've got kind of a term trading strategy more so than a hodl strategy, at least during could potentially be a bear market. But if not, I mean, from a technical standard, we technically still are in a bear market, and I'm going to dive into that right now. So sorry if this is a little paced and I'm out of breath already. I don't know why, man. But here we go. So one of the first key things that I want to talk about is Bitcoin wallet addresses. This is, as you guys can see, I hope I did the screen recording right again, but as you can see, this is 1,000 Bitcoin wallet size. So wallets with 1,000 Bitcoin or higher. If we zoom in over here, we have not noticed any change at all. At least anything significant. In fact, all these wallets sold off, basically in February, March. And of course, the last being in May, right before the drop, which is something that I wish I had seen as well. Because if we just kind of follow what the whales do, the 1,000 coin wallets, I think we're going to be okay. I don't want to just ignorantly follow any one thing, but I do think this is an okay thing to kind of look at. Now, with that being said, one potential pop-up against this would be, 1,000 coin wallets doesn't mean there's not 1,000 coin entities, meaning someone might have 10 100 coin wallets, someone might have 1,000 or 110 coin wallets, or 1,001 coin wallets. So I'm going to pull this up real quick because all that information is provided here. We have 100 coin wallets as well. Nothing's changed. So it's not like they're breaking these 1,000 coin wallets into 100 coin wallets. If we look into 10 coin wallets too, this has had a slight trend reversal. You love to see that, but it's not significant. It's not significant by any stretch of the imagination. The only people who have really made a significant change is the retail investors, which is the one coin wallets, if you see. But retail fucks it up. Retail doesn't get it right. Retail was investing during a bear market during, after the 2018 peak. This is all retail investing. If we go back to the 1,000 coin wallets, they didn't touch that time. The whales didn't touch that time until a significant drop and that was the accumulation range of a lifetime was back in, when was this? 2018, 2019. And of course you see all the whale wallets diving back in here. So the point I'm trying to make today, fellas, is, let me just close out of those wallets. We've gone through that point. But the point I'm trying to make is crypto Twitter is, kind of exaggerating what's going on when, I'll break down the volume in a sec and a few other things. Although there is, the market cap, which is a very bullish looking thing. And we'll dive into that in a sec as well. But don't be fooled though by crypto Twitter thinking that whales are actually joining the run. They have not touched it. And if they're not buying $30,000 coins, why aren't they buying $48,000 coins? Why aren't they buying $50,000 coins? Why aren't they buying $44,000 coins? And you have to raise some questions there. You have to honestly look at that. And again, I'm not here to just bring bad news every one of these videos and be the bear guy. Like, that's not the point. The point is just to bring hopefully transparent, authentic information, and we can dissect it and implement certain strategies based on what you're doing with your money. So Before I further dive into this isn't like, oh, this is bad news. Bad news is only subjective. It's good news if you're shorting. It's good news if you're, knowing where to put your money. It's good news if you have a strategy that it goes against potential shortcomings that could be in front of us. Could also not be, but that's all this is supposed to be, is just an informational bit. Man. So hopefully that made sense. Quickly hopping into the next thing. Again, I'm not trying to spend too much time here, but we have the golden ratio multiplier. This is just a 350-day moving average with just a multiplier. We've seen this before, I think, in previous videos of mine. And maybe you guys have checked these things out personally. But just ignorantly looking at this, not getting too economical, not pulling out the econ degree, not pulling out, any of that stuff. Just literally looking into this. Every time after a run up, at least a cycle peak run up, Bitcoin's price action moved down to the 350-day moving average, the gold line here, and then went to the 1.6 multiple of it, which is that green line. So it touches the gold, or almost touches the gold, then pops up to the green, or almost touches the green rather. We see that trend in every cycle top, and there's only 2 data points so it is a little bit speculative to look at that. I think I sent this in the group text as well. But if you look at this, we're not doing anything that Bitcoin hasn't done after a potential cycle top. This has happened where it touches the gold, almost touches the green, and then crashes. That's why I'm a little bit concerned of this week, because this price action that's been happening this week is right on time with this idea. And I'll break it down in another chart real quick, which is, which one of these is it? This one over here. So if we go back to 2014 and we just speculate, we just completely ignorantly extrapolate, without busting out the econ degree, without like busting out math, without busting out calculus, without just ignorantly looking at just ignorantly looking at charts and price action. If we just count, let me go to the 5-year view here, 5-year view, and get the weekly candles going. Where are we at? 2014. Okay. So if we just count the weekly candles, we have 1, 2, 3, 4, 5, 6 green weekly candles. This is during the bull trap during 2014. This is now what I think we're actually modeling, personally, in my opinion. Again, could absolutely be wrong, but this is what I think we're modeling. And again, I'm hopefully providing the evidence to why I think this is so. If we look at these candles, we have 6 green candles, right? After the cycle run up. Now, if we just go back to, let's check out the 2018 bull trap, right? Right here. And these are all, by the way, these are all the same spots where it touches the gold line and then almost goes to the green line. We have 1, 2, 3, 4, 5 monthly 5 weekly candles. Where are we at now? You can't make this shit up, fellas. We have 1, 2, 3, 4, 5 monthly candles. And of course, what's happening? We're seeing the price start to consolidate, at least in Bitcoin. Maybe not the altcoins, maybe not Ethereum, but fellas, this is telling to me of this is nothing out of the ordinary that Bitcoin hasn't done outside of a cycle top. And that's what I'm trying to get the point across, is like, we're not out of the woods yet. We've definitely put in a promising trend reversal so far, but this is not anything different from any historical bull traps at all. Even to the point, if you measure the price increase. So we have what, call it a 60% run up so far, 67%. And again, we go back to these other bull traps. I think this one's, maybe 40 or 50%. And the other one was 60%. Let's just double check real quick. So run it up, 54% roughly, plus or minus a few percents. And then this one over here, I think is also, a little bit more. I think it's about 60%. And let's see, boom. 70%, excuse me, from candle wick to candle wick. So we're not seeing anything that hasn't happened before. Bitcoin today has done a 60, 70% run up. So this next month is going to be very telling of where we're at in this market. So boom. Okay, I'm going to get out of that one too. Gone over that point. I'm trying to blast through these. Sorry if I'm kind of going a little quick, but just blasting through them. I'm going to get rid of the golden multiplier. We went through that. the NVT, this is a great, I think this is something, by the way, in the future that we should use just as a tool for investing. Again, with the other tools and stuff, that we can reference other charts and other things of accumulation regions of a lifetime. Now, of course, you can always say, hey, just buy and hold. Like, that's a great strategy. Like, it's bulletproof. It's worked. But let's be honest, I'm trying to become a multimillionaire by the age of 30, not 50. I'm not trying to wait that long. Like, you know, and I think, you know, and maybe my rushed exuberance could be potentially my downfall. I'm aware of that. But at the same time, I don't know if it is. I think great analysis can go a really, really long way, as it did last month. And I'm not trying to say this to flex, but last month I made $18,000 in a single month. In 3 weeks, actually. I've never done that before in my life. And I don't know about you fellas, but I've never seen $18,000 in a month. That's stupid money. That's insane. And I don't really care about materialistic things. I don't really care about cars and watches. I do care to look presentable, but, you know, I really don't care about clothes neither and whatnot. But the point is like, we want to ultimately, and again, if buying and holding is your strategy, I think that's a brilliant strategy. It can still be incredibly valuable, especially during a bull run. During a bear market, not so much. But either way you put it, I think there's better times to buy and better times to hold, or better times to sell. And if you just ignorantly want to use the NVT signal, and again, you guys should all use these things. Look into Bitcoin.com. It's free. All these charts, everything's free. If you just follow the NVT, I think NVT is just the network value something signal. I forget exactly what it is, but basically it's trying to depict the fair value for the network, I believe, for the network effects and how many people are using it. I think it takes a few things into consideration. I'll have to look more into this specifically, but again, just ignorantly looking at the charts, not doing any math, not doing any sort of, you know, economic or econometric analysis, anything like that. We're just looking at the charts, ignorant as ever. You just want to buy when this blue line is low and sell when the blue line is high. Or if selling's not your thing, you just want to keep accumulating when the blue line's low. That's it. So you want to accumulate down here. Mind you, this is when I was accumulating for, you know, this run up until July 20th was my last day of accumulating. I twatted about it. I texted that to Raf, and I was impressed. I couldn't believe that July 20th was my mom's birthday. That's why it was like the last day of me accumulating, which happened to be like the very next day Bitcoin started running up, which was just pure luck. Could not have planned that. But the point is like, fellas, use these tools to make you more money. So even if we're in a bear market, you want to be buying these dips. You don't want to be buying like the highs if you want to make the most out of your money or the most out of your paychecks. And I think overall, the most that you want to do is really buy in these accumulation zones of a lifetime. And there's ways to measure those. There's ways to identify those. Some of that is you want to look at the 200-week moving average. If Bitcoin ever touches the 200-week moving average, which it very rarely does, but when it does, those are the times to put your money in Ethereum, put your money in Chainlink, put your money in Bitcoin. Those are the best times in the world to buy. I'm fairly positive, because Bitcoin in its 10-year history, which I guess, you know, it could in the future not follow this, but so far it has not gone below its 200-week moving average for very long. And these are all the best times to buy. And you just hodl the shit out of that. But you don't want to be hodling things around peaks, in my opinion, in my assessment of things. And especially when we don't know if this is a bull trap or not. Like, I'm just being honest. I don't know how you guys are still in this market. You guys got to be on crack, because, like, you know, and I could be wrong, but kind of moving forward, what I would hopefully advocate is this information is presenting to you guys. Not to say get out immediately, but put a plan together where you're saying, hey, I'm going to put a stop loss. If Ethereum goes back to $3,000, I'm out, because like it's at $3,700. So if it goes back to 3,000, that's almost a 20% drop. And although we experience that in crypto, you don't want to experience that when we're not in a confirmed bull market. I know crypto Twitter will say whatever, but from a technical analysis perspective, we are still not in a bull market. That's not a thing. We are not in a bull market still from technical analysis perspective. Here's the guy's risk dashboard that I crypto sent over. Here's bull run necessary, but not sufficient conditions. If we stare at these, have we had a golden cross, a true golden cross? Maybe according to crypto Twitter, when we have like, I don't know, the 20-week move, like the 350-day or whatever golden cross metric they use, but we have not had a golden cross. And on top of that, after there's been golden crosses, after massive run-ups, it's usually indicated the beginning of the bear market, actually. Have we held the 20-week moving average? The answer is no, we have not. We haven't tested it yet. More than likely we'll test it, and that's at $42,000, and we'll see what happens. If it breaks through, you can fucking guarantee that we are 100% in a confirmed bear market, and that was 100% a bull trap. Now, does that mean that it has to happen? Absolutely not. We could, this is a dynamic market. This is a living thing. But technically, from technical perspectives, we are still not in a bull run. We have lower volume. We have less interest. If you look at the Google trends of crypto and Bitcoin and this, that, and the other, we have less interest than what we had last time we were at $40,000, or even beginning of this year, or even before the beginning of this year. So crypto Twitter will make you think otherwise, but we are not in a bull market still from technical perspectives, from technical analysis. We are not in a bull market, fellas. We are still in a bear market, and that's why it's important for you guys to understand this. It's not what Pag says. This is the facts. This is the data that we're being presented with. Now, what you do with the data, you could still find success in bear markets. You could still find success in doing things. You could still cash out and make money and buy dips and buy and sell highs. You could still do these things. You could still hodl through for the next 5 years and still profit off every decision today. All I'm trying to do is present you guys with information. So one, it starts the talk of technical analysis, because we could all present data that can potentially prove other things. But as a whole, if we have more talk and information on technical analysis, we can ultimately decide the best strategies to do with our own personal strategies, or kind of your guys' general sentiment is to hodl, just hodl. Even hopefully this would equip you mentally with, okay, we could still have a bull run from this, by the way. Just because I'm presenting this information doesn't mean we're 100% in a bull trap. That doesn't mean that. But what it does mean on a spectrum of probabilities, you have to allot certain statistical probabilities of what's going to happen. You could say, okay, is it more likely to be a bull trap? Is it more likely to be an absolute bear trend? Is it more likely to be a bull run? And that's for you to kind of ultimately figure out within yourself. But what you want to do is equip techniques and strategies that can make you money in all situations. So for instance, as I mentioned before, investing in a mining facility is great, because a mining facility will pay me every single day in the same amount of US dollar value relatively in Bitcoin throughout the entire bear market. I'll be getting paid every single day for the next 4 years, 4 or 5 years, basically until that miner breaks, or until, it becomes ineffective to run the mining equipment and whatever. But that's a strategy used for a bear market. I'm just telling you, the short, that's a strategy to profit in a bear trend. So just because something's going up or down, it doesn't mean it's necessarily good or bad. It just depends on which side of the fence you're on. And that's all you want to do with your probabilities. Now, of course, hodling is a great strategy, because you kind of always get the opportunity to upside. However, if you knew that there's a 2-year bear market in front of you, I can guarantee you wouldn't want to hodl right now. Maybe you would, I don't know. But me personally, I can't see my bag go down that low. I could take a loss on a short and be like, you know what, I'm still going to hold it and still allocate a certain amount of my portfolio to it. I'm okay with losing that money. But I personally am not going to be okay with buying a Bitcoin right now and watching it go to $10,000 and then feel okay about myself. I would kick myself for that. But and the alternative is true. If the bull trend continues, I could be okay with buying back in at $65,000 when there's a confirmed direction. I'm okay with that. But right now, given the moving averages, given the the other signals, given the fact that crypto isn't talked about nearly as much, it's not in Google as much, given that crypto Twitter is overly delusionally bullish and everything's back to normal, and that'll give us right back to this market cycle trend here. This is 100% potentially where we're at. Oh, everything's back to normal. Now you could say, oh, we're in the bear trap. You could say that. You could make an argument for that. But we've gone through media attention. We've gone through enthusiasm. We've gone through greed. We've gone through delusion. Delusion was when people were making millions of dollars off shit coins, which is what I referenced back when I referenced it, when people were making millions of dollars off dog coins. Now people are making millions of dollars off JPEGs, so it feels rather frothy to me. I'm just, again, being honest. I understand that NFTs have inherent value and can, be part of the digital marketplace in a very brilliant way. But to me, it doesn't make a lot of sense that people are dropping millions of dollars on a rock. Or there's even invisible rocks now that have sold for $100,000. It's literally just a blank white JPEG. Guys, like, if I had it, and I'm putting my money on it, that we're in a bear trap. Now, again, the only reason why I'm saying that is because, there's a lot of reasons. If you look at the volume, right? Look at the volume. The volume is far less. The volume's down here. The volume is far less than when we were last at $40,000. This is when we were last at $40,000. That's a substantial difference in volume. You could say, oh, it's not, but it is. And it's on a downtrend, by the way. Going down, not up. In the bull run, you want to see things go up. You want to see things go exponential and have a little bit of that curve. And another reference you can look at is this MACD crossing. This is a big, typically this is a bullish signal when these things uncross. When the blue, I believe, is the shorter term moving average, is like the 50-day, and then the red line, I think that's the signal line, is like the 200-day moving average, I'm pretty sure. So typically this uncrossing is a bullish signal. But however, if we pull up, let me pull up another. Shoot, I need to get to the gym, so I'm trying to blast through this a little bit quicker. But if you look at, let's see. Let's launch this chart, and you go back to 2014, the the bull trap that I think we're kind of modeling, man. I really don't think we're doing anything out of the ordinary. So if you look at the MACD uncrossed here as well. And if we go, where was it? Back over here, it's uncrossing, which again is a good sign. It's a reverse trend sign, but it's not anything out of the ordinary for what we've seen after a market cycle run up. At least as things stand right now, the potential that this is a bull trap is still very evident. And I would argue it's evident if we, again, look back into these Bitcoin charts. I would argue it's evident up until we hit the green line, right? So where's the green line in today? The green line today is around, I think, $56,000. So that is when I can say $57,000 is when Bitcoin is technically, and when I would feel from a technical analysis standpoint, and of course, according to volume and general sentiment, and if wallet addresses changed and things like that. But that's when I would say, okay, we are definitely back in a bull run. And if the 20-week moving averages is tested and held and this, that, and the other, like a lot of things need to happen for us to technically be back in a bull run. Just heads up, still possible. Don't take this as, oh, I need to paper hand and sell everything now. Retrospectively, I wish, I didn't sell everything entirely in a day, but I would definitely start dollar cost averaging and taking profits out. So like Roth, for instance, if he has 10 coins, like, dude, you could sell half of a coin, cash that profit, and it's 5% of your portfolio. And if it goes up, you can cash out another half. But the reality is, and this is the other side, when are you going to sell? Like, do you sell into strength or do you sell into weakness? I would rather sell into strength. And it's like, man, like I'm just presenting this information, hopefully not too aggressively, hopefully not, with a bad tone, but like just in the presenting information, like this is generally concerning to me, because if we do have a confirmed bear trend out of this, and this month is going to be very, very telling of what happens. We're going to look at pretty much a drop to the 200-week moving average at some point within 6 months. So that's roughly, what is this? About a 70% drop. And what that's going to do for altcoins, I mean, you already know that's going to do even more for altcoins, but the point is like after market cycle tops, we always run back down to the 200-week moving average. Now, is this the ultimate market cycle top? I don't know. I'm not that smart. I'm a smart dude, but I'm not that smart. But the whole thing is like we aren't out of anything special. Like this is still all terms for a bull trap. Until probably the market cap is higher, until certain things are met, until so on and so forth. Right here, I brought up the market cap. Here's the 2014 market cap dates. And here's where we're at today. This is after the top, and then this is the bull trap. And if you look at, we kind of a little bit model that. Of course, it's more significant here. You have a bigger run up here. So, you can argue that, okay, this might be the bear trap, and you could definitely make that argument. But, that's the 2018 bear trap, which is that one, which I don't think we're in at all because, it just doesn't look similar at all. But the 2014 one, I do think we're potentially, again, until certain things are hit, we are not out of the woods yet, fellas. So all I'm trying to say is, don't get like paper handed, but like, don't be afraid to like walk away with a W or just start the W process. Like, again, there's multiple strategies you could do, but if you're in profit, it's so much better, in my opinion, to have a short-term capital gains issue where how much tax do I have to pay? That's a good problem to have. It means you're winning. It means you've won. But it's not a good strategy when you have to write tax loss harvesting, when you say, fuck, I've lost. I need to pay, or I need to cover and write this off as a tax loss, which you can do, by the way, if you do end up holding and things go bad. But I don't know, fellas. It's like, here's a solid strategy though. If you got 10 coins, right, sell part of it, and if it goes up, cool, you still have more to sell and still have more to profit from. Like, that's exactly how it should go. How else would you profit? How else would you say, I did a good job? When do you sell? Even if there is a massive parabolic run up, when would you sell? Would you sell it all in one day? Would you sell it all like, So I don't know. And I think that way you get a little bit of the both worlds. So you cash out a little bit, and then if it goes up, you still have 9.5 coins, and then you cash out a little more. Then you still have 9 coins. So if it goes up, okay, then you cash out half of another coin. Okay, then you still have 8.5 coins. Like, but I don't know. I think, and I don't mean to be rude, but I think some of your guys' hodl is rooted in greed, and I think greed will be the downfall of like the hodl mentality. Maybe, I mean, unless you're really going to hodl for like 4 years back into profits, but it could be like a year long or 2 years long before seeing Ethereum back to $3,000-$4,000. Potentially, if this is a bull trap. If it's not, then, you guys are all doing the right thing. But again, all I'm trying to say is maybe have a strategy that you can get the best of both worlds where, you're kind of hedging a little bit about if things went down, great. If you sold now and things went down, it's like, great. You could reinvest, and buy $3,300 ETHs, and then it goes back up to $3,800. Like, boom, you just made more profit. Like, but to what point is like, when are you going to profit? Like, I don't know. Like, I understand we all fuck with the technology. We all fuck with, like, I love the crypto space, but when like, we're here to make money, at least that's why I'm here. But like, at what point do you walk away and say, I did a good job? Like, I'm going to treat myself a little. I'm going to like, I don't know. And I'm only making this because I really do have a general concern that this is a bull trap. I really, really do. And again, if we look at the Bitcoin dominance chart, this is another great example to why I think this is a bull trap, because we're not doing anything. This was the peak back in 2018. they don't have enough information for us to go back to the 2014 peak. There wasn't the Bitcoin dominance chart back then, but we're not doing anything. This was the bull trap, and after the 2018 peak, and we're not. Nothing is. We're still completely in bull trap zone. Still completely, entirely from top to bottom. Now, does that mean we can't have a true trend reversal? Absolutely not. Like I should definitely make a bullish case because, now that I've presented a bunch of bearish information, like absolutely, this is a living market. Crypto is absolutely more mainstream. You can't get away from it. It's everywhere in the news, on ads, on media. And, you could definitely make an argument like this could go parabolic in a month from now or 2 months from now. Who knows? But as things stand today with lower volume, whale wallets not moving, Bitcoin dominance modeling exactly what we did, the MACD modeling exactly what we did in 2014. And don't get it twisted. Like we are not out of any bear trap zone or bull trap zone. We are still 100% within all these same analysis is we are still 100% in bull trap zone. And I'm not saying that to scare or to say, hey, you guys need to sell. That's not the point. The point is like use this information and implement it to your strategy, even implement it to your mentality. So if you're not going to sell, then great. Like just let it be known that, okay, like if things do take a turn, you're mentally prepped for it. So you're like, okay, yeah, I knew a 70% drop was coming, but I'm here to just buy more ETH. Like have a mental strategy with whatever strategy you go with. But I don't want to see things change where the sentiment goes bad and then everyone's all bitter and angry and like, fuck crypto and this is annoying. It's like, no. Like just learn how to navigate and learn how to prepare yourself mentally if things were to go that way, or make a strategy where you kind of hedge both sides a little bit, or there's a lot of ways to interpret this information, but the very biggest thing that I'm trying to communicate out of this is, we're still in bull trap zone, fellas.